But let's chat about where the market is headed. Sachin Trivedi joins in the show to talk about exactly that. Sachin, hi, morning. Have to begin by talking about IT. Sedate as the quarter was expected to be. There has been a margin disappointment, but the numbers are largely in line. And TCS commentary is indicating a very strong deal pipeline as well. What to your mind then is causing the disappointment in the stock today? Because all the brokerages have upgraded the stock and their target price.
So I'll refrain from talking about the company per se, but within the sector, the trends that we see clearly is that corporates are more positive about the outlook. Even the traditional side of the business, no longer the companies are talking about pricing pressure or that traditional business which was degrowing. That side of the business is actually now started to inch up. But where the more excitement is the newer businesses, which is the digital side of the business. Some of the corporates which have been reporting results, they have started showing a decent growth rate as far as this part of the business, and now this is becoming a significant chunk of their overall businesses. So that's where the IT per se, this side of the business is looking really great, and in fact we are also positive on overall IT space.
Let's now shift focus and talk about your transportation fund. I see that you have your top holdings are the likes of Maruti, M&M, Eicher, Tata Motors, Concor. Let's talk about the landscape that First Auto is, are currently dealing with. And one has seen a marked slowdown in the monthly sales, as also the stock price performances as well in the last 3 months. What to your mind is bogging down and bringing about this pain for autos?
So you're right. So if we see last calendar year, this entire index per se has seen close to 20% decline, and some of the large auto names have seen a much sharper decline as far as prices are concerned, and this is also largely on account of sharp slowdown that we have seen in auto volumes, especially in H2. So H1, as far as volumes are concerned, volumes were quite healthy. Double-digit growth we have seen both in two-wheelers as well as passenger vehicles and CV side of it. But in last couple of months we have seen sharp slowdown as far as volume is concerned. Now there are a couple of factors which are resulting in this sharp slowdown, starting from some of the changes which the regulator or courts have put, which have made insurance as a compulsory third party as well as accidental insurance for the persons, which has resulted in a substantial cost increase for this side of the business. So for example, a passenger vehicle, this cost hike on account of this. So just the third party insurance cost for passenger vehicle could be as high as 3 to 5%, and in case of two-wheelers it is as high as 10 to 15% for the lower side of the two-wheelers. So this is one of the factors which has resulted in substantial cost increase for end consumer. Along with that, the raw material price hikes which were passed on to the end consumers, certain safety standards which are implemented, which is resulting in cost increase for the consumers, and finally what we have seen for last 1 to 2 years, this end petrol prices or the diesel prices have been going up, which was somewhere playing in the mind of consumer, and net after a point there is some level of cost increase which they cannot take, and which has resulted in a sharp decline as far as this volume we have seen. And finally, the NBFC crisis to an extent would have also resulted in some slowdown as far as this sector is concerned, because we have to keep in mind that if we look at the commercial vehicle, almost 100% of commercial vehicles are financed, passenger vehicle almost 80 to 85% are financed, and two-wheelers almost 50 to 55% of two-wheelers are financed today. So somewhere if the lenders are not willing to lend in particular time frame, then it creates a issue as far as demand is concerned. So all these factors put together has resulted in sharp slowdown that we have seen. Good news is that in last couple of months we have seen raw material prices, let's say aluminum prices are concerned, they are down substantially by 10 to 15% or more. The auto grade steel prices are down, and finally the fuel prices per se, all of us have noticed that the fuel prices are also down. So somewhere there were some headwinds. Now we will start to see some easing of some of these cost pressures for the end consumer. In let's say last 3 to 4 months we have seen sharp slowdown. It will take some time for demand to come back, but we are quite hopeful that in medium to long term the demand should go back to the normal trend.
Okay. So what has been your strategy of late, Sachin? In the last 3 odd months, have you brought down your holding in any of the auto names, or have you actually used this decline as a buying opportunity and to add more positions?
So yeah, we would be looking at from the outlook that we have for certain companies, and companies which have a strong growth outlook, especially from the trend perspective, and not necessarily looking at short term what has happened. They are companies with strong growth outlook with healthy balance sheets. We have definitely added positions, especially in the auto OEM names, because some of the larger names would have seen sharper correction. But end of the day, as I said, that medium to long term outlook for some of these auto OEM names is very strong, and this was a good opportunity for us to actually add some of these names. And of course, if you look at from the fund perspective, we have added positions in auto OEMs, and to an extent, and also certain auto ancillaries, very specific.
Okay. Wanted to in particular discuss about iShare, and I don't know if you can talk about individual stocks or not. The fact that this has really been the most beaten down story in Motown, you know, the management spoke with us exclusively, Siddharth Dalal, and he's extremely confident that, they're rubbishing in fact competition, and they're very confident of getting back to the growth levels. But look how beaten down iShare has been. At sub 20,000, do you believe there's value in iShare right now? And how soon do you think, can we see the growth numbers actually come back for iShare?
So I will refrain from commenting about any particular company, but then what we have seen in market, let's talk about the space. The trend that we have seen within two-wheeler space is that within motorcycle, of course motorcycle is also growing, but within motorcycle what we have seen in specific is that some of the premium motorcycles have been growing well. And this contribution of, say, within overall two-wheeler space, the contribution of some of these premium motorcycles is now close to 60%, close to 6% in the overall two-wheeler space. Of course, name specific. So what the trend that is suggesting is that more and more people want to upgrade themselves continuously. There is certain section of people who would be awaiting for the bikes that their parents would have owned, and they would always be liking for certain segments. But again, this is important that people are looking to premiumize themselves. They are looking for different offerings which are available in the markets, and which is a growth story that we would be actually quite some of these areas where we are quite positive about, and we have been looking for. In this segment especially, the challenges in recent past has been, as we have spoken in the previous question also, is that because certain high-end segments are financed completely, or at least 80-85% of this segment is financed, and which is where there has been certain challenges. Also the cost pressures have led to certain challenges. Also in this category maybe we have seen temporary slowdown, but not necessarily there is any growth outlook which we are concerned about. And of course, if there are more offerings, generally we have seen that it results in better growth for the overall industry. This is how I will put.
Okay, Sachin, good to have you on the show. Thanks much for joining in and talking about IT and, of course, more importantly, your transportation fund and your view on Motown at large.